SCHD officially paid its largest dividend ever last week. Congratulations to all of you holders out there. A lot of people were mad about the reconstitution of SCHD earlier this year in March. The thought was that if it was already lagging on total returns in the past couple years, then why on earth would it drop companies like Broadcom? I, for one, was happy with the changes. The methodology is staying true to finding value companies that pay and grow their dividends consistently. I'm going to tell you why it is the best ETF for what it does in this video. And spoiler alert, we are not exclusively chasing total returns with this one. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please uppercut that like button, subscribe if you haven't already, and drop me a comment down below if you recently received a bag alert. Quick reminder of the things. If you're interested in Seeking Alpha Premium, get a free trial and a discount from the link down below. And check out my favorite books by using my Amazon storefront link. I have all the books I've been reading if you're interested in being a big nerd like me. Who could resist? You know what time it is. Let's grow. SCHD Dividend History. SCHD has an incredibly consistent dividend history. It has increased the dividend per share that it pays for every year that it's existed. That's right, you have never received less money than you did the year before as an SCHD holder. Think about how treasuries or high yield savings or other dividend ETFs are all over the map with their dividend payments by comparison. Last week's dividend payment was just over 82 cents per share. That obliterated the previous all-time single quarter record of 74 cents. Let's jump over to Seeking Alpha to check out SCHD's dividend highlights. All right, I'm out on the dividends tab for SCHD in Seeking Alpha, and we're gonna start here with the SCHD dividend grade. So this just shows all the high level stats of SCHD's dividend. You can see the current yield is 3.66. That has been increased based on the reconstitution, now that the first official dividends have been paid since then. It's trailing 12-month dividend. That's the last year, it's grown about 9%. Its average growth per year, its dividend CAGR, compound annual growth rate, in the last 3 years has also been around 9%. Now its 5-year CAGR is an impressive nearly 13%. That's wild. And its 10-year, so this gives you a very good big picture view of what it does over time, is 11%. And you can see that it's grown its dividends for 12 consecutive years, and that's every year since inception. But I want to hop over to the growth tab here. This is what really is the big deal about SCHD that separates it from many of its peers. You can see in graph form that it has gone up as we go year by year, each and every year since it's existed. Some of them way up, some of them, a mild jump like this one from 2022 to 2023. Now I'm going to come to the dividend growth history table form. It's not as pretty as a chart. This will help explain why the concept of dividend growth trumps high dividend yield. Remember, dividend yield has price in the formula. So outside the day you buy it, it's completely irrelevant to how much money you're receiving from a holding. Dividend growth is the actual nominal dollar payment growing over time. So per share in 2012, the first full year, SCHD paid 81 cents, and then it's up to 90 in 2013. And we go up in the years, $5, $15, $26, $35, $44, 172. In 2020, we know what happened that year. 203 a share. 21 is 225. 22 is 257. Big jump there. And then a smaller jump up to 266. But just think about this. If you bought one share of SCHD in 2012, forget about the yield, because that stayed low because the price has appreciated so well. The formula stayed in check at about 3% yield, somewhere in the threes. But each share was paying 81 cents. That's what you actually received from each share. That same exact share with no reinvestment is now paying you 266. Well, now in 24, it's going to be even higher. But think about that. You've over 3x'd your per share dividend by just holding. That's it. Now it's time to discuss the true role of SCHD in your portfolio. SCHD Portfolio Fit. SCHD isn't necessarily built to be a total returns machine, but I do think that people are getting a little too down on it over the past couple of years. SCHD's methodology selects 100 value companies with clean balance sheets that have also had a strong dividend history. The market has seen a historically lopsided growth run lately. That doesn't bode well for SCHD, but I want to tell you something that you probably don't know. SCHD had outperformed the S&P 500 over its first 11 years of existence on total returns. And you probably have to see this to believe it, so let's hop over to my screen. All right, so I have SCHD pulled up here and we're on the charting tab out in Seeking Alpha. And with Seeking Alpha Premium, you have the 10-year available and any custom range. So I ran the range from 1 to 2012, which is the start of the first full year of SCHD, all the way through, and it doesn't show here, but I did it through 12/31/22. So you can see it's over 4,000 days. So clearly that's over 10 years, 365 times 10. It's for an 11-year stretch. And you can see that SCHD's total return is 301.44 to the market's 271. Now look, I'm just gonna do this live here. I haven't looked at this. And I know SCHD is gonna fall. In the last 10 years, the market has dominated. It's been 231.5 to SCHD's 175. So SCHD's had a really rough 23 and 24 as growth has skyrocketed. You know, you throw something like, just for fun, let's throw something like VGT in the mix just to show growth, 555%. I'd say these are both lagging. Let's call it what it is. But this has about half growth and half value. You can see that growth has propelled it well above SCHD. But SCHD is still the ultimate floor for a portfolio, and I think it will have a bright future because eventually this growth cycle will calm down. It's been a terrible run for value stocks, and SCHD has been particularly bad on total returns, even compared to like ETFs. But I wouldn't overreact too much on just 2 years of data. The screening process gets quality value companies that will be your portfolio savior when this crazy growth run flips. And it will. I'm a believer in an equal balance of SCHD to counterbalance my growth holdings of VGT and QQQM. And this isn't a hard rule, of course, on how to do this. There's no one size fits all. But I would caution anyone from going all in on growth just because the recent bull market. The reversion to the mean is inevitable, and I think SCHD will make you look very smart when that time comes. SCHD Performance Update. I will be doing a quarterly deep dive moving forward to compare every aspect of my favorite dividend ETFs. That one isn't ready yet for this quarter, but we may as well take a sneak peek at the performance piece now. A fair warning, as many of you have pointed out, SCHD has been getting beat up in the last couple years. Let's check out the damage. Okay, so we're out on the charting tab once again, and we've pulled up SCHD's friends. And I'll quickly set the table here. So we have SCHD, we have VIG and DGRO, which are two of my favorite dividend growth ETFs that focus on growing the dividend. And then VYM is a more high yielding option that also slightly grows dividends. The beauty about SCHD is it has a higher yield than all of these, including VYM, and it has a higher 10-year growth rate than all these, including these dividend growth ones. So SCHD is a pretty crazy hybrid, but I like to bring in some pures that are made for growth and a pure that is made for yield. And there's a couple other yielders too, but they don't quite have the timeline, like when we go out 10 years, that they need to make something like this. So year to date, you can see that SCHD is up 4% on total returns, and all three of the other ones are up roughly 8%, with DGRO having the slight lead. If we zoom out a full year, SCHD's only up 12% to VIG and DGRO's, wow, they're really close. They're up 16.5%, and VYM's quietly the winner. Now, when we zoom out 3 years, this is where SCHD, 2 of the 3 years have been awful, and it's only up 14.7%. And you can see VIG is actually the king, just over VYM at 25.5% to 24.6%. And then DGRO comes in at about 23%. You get up 5 years, SCHD begins to shake it off a little bit, and it's at 73% to VIG's 74 and DGRO's 70. So these ones are basically in a three-way tie. And again, SCHD has slightly grown its dividend better in this time, and it has a much higher yield. And then VYM starts to lag at 59%. And then going out 10 years, and I'm excited on this one because you can see I'll just hover over one. 3,647 days. When we go to DGRO, happy birthday, 10 years old. It's officially 3647 days. I used to have to make that disclaimer every time I do the 10-year return. DGRO wasn't quite there. So it's officially here. It's arrived, and guess what? It's been the champion in the last 10 years, all things considered. And it's up 189% to SCHD's 175 and VIG's 182. And then VYM lags. It always will, in my opinion, the nature of how it's set up, but it's at 142. It's made for yield, but again, SCHD has a higher yield and better growth and better total returns. I think that'll stay because as you saw, SCHD's been terrible lately, but it's superior to all of these if we do that cherry-picked first 11 years that we looked at earlier. SCHD cash flow example. It's hard to wrap our heads around the real impact of a high dividend CAGR. Let's look at a specific real example of what SCHD has done if you had been investing in it since its inception. All right, we're out on Portfolio Visualizer, and we're going to keep this one pretty simple today. We're going to run from the first full year of SCHD, which was 2012, through 2023, just so we have a good clean start and stop. So that's 12 years of data, starting at $5,000 initially, putting in just $200 per month, and we're going to reinvest the dividends, yes, and display income, yes. So a very simple scenario, and we're gonna hit analyze. Okay, and let's check out the results. We're here at the performance summary, and just an FYI, starting at that $5,000 and putting in the $200 a month is a total contribution of $33,800. So you put in $33,800 of your own money, including the 5K. So you can see you end with 81.4K with SCHD, and you would have done a little better in the market, 88.5. And again, SCHD had a terrible 2023, but the time-weighted returns and the money-weighted returns are over 12% for both of them. So fantastic returns. Best year was slightly better with SCHD, and here's the big kicker. The worst year is way better with SCHD. So it'll give you more boring returns compared to the market, which will tend to swing more. The annual returns are interesting. SCHD is the blue bar and VU is the green bar. And you can see that these two funds trend together. You know, VU got a nice start here in 2012, but then they're pretty close most years. SCHD was actually down a little in 15. You just go year by year and it's not gonna wow you for the most part until you get to 2022. SCHD was superior. 2023, we went ahead and flipped it the other way to VU. So SCHD, when it hits the fan, will give you portfolio protection, but it also won't capture specifically technology upside. And for the trailing returns, you have in the last 3 years, SCHD has been up 9.5% to VU's 10%. In the last 5 years, it's been up 14% to VU's incredible 15.6. In the last 10 years, it's right there at 11, which is very solid, to VU's 12. In the full 12 years, it's 17.75 to VU's nearly 14%. So it's been a bull run for everything in the last decade or so, especially growth. Okay, now we're getting to the point of all this here on the portfolio income. And remember, this is being reinvested, so everything was included in the total returns. This is where SCHD shines. So in 2012, it had a better starting yield than VU, as we would expect. But look throughout the years what SCHD does compared to the broad market. This is where that dividend growth begins to separate SCHD from our basic index funds. You know, it's over double the income by the time 2021 hits. And even after that terrible 2023, you can see that we're at $2,700 of annual income versus $1,200. You know, you might say that's not enough for anything, but remember, this is with only $5,000 invested. You'll have a lot more than that realistically once you put your mind to it. And only $200 a month. You should at least max out that Roth with $583 a month. So this is just the stepping stones, but the growth is all the same regardless of the numbers. And as you can see, it is wild how SCHD sets you up from both a cash flow perspective and, as we saw above, a portfolio floor. final thoughts. SCHD is the best complement to the popular growth ETFs such as SCHG, VGT, or QQQM. The overlap is almost literally zero. And that's not random. The selection process puts a tremendous emphasis on value. The specific companies will change, but they will always have little to no overlap with the popular growth ETFs. It really is a quality hedge to have for your portfolio. Now, if I could only hold one dividend ETF, and I could only hold one ETF, period, I would probably get something like DGRO over SCHD. I would feel a strong desire to get exposure to some of the primary tech companies that DGRO has, and the growth ETFs of course have, and SCHD has zero of. What I'm saying is I don't necessarily think that SCHD is the best dividend ETF in a vacuum, but I do think it is the best, and by far and away, compared to the other popular dividend ETFs, to mix into a portfolio that also has VU, VGT, SCHG, QQQM, SMH, VTI, and the list goes on and on. And speaking of the best, we had 5 new channel members this week. A huge shout out to Chad, Nicholas, Solo, Troy, and James. I really appreciate the extra level of support, you guys, and I'm thankful for everyone that's been here all along. I hope you're enjoying the spreadsheets, the badges, the emotes, and the comment priority, which is actually becoming a thing because I'm getting more and more comments. Whether you're a member or not, if you're watching this video, especially this deep in, first of all, what's wrong with you? And second of all, thank you, because you really are making this possible. Check out one of these 2 videos if you want to get your inner nerd on and continue learning about this stuff. You are going to take the financial freedom throne in no time. Thanks for watching, and I will see you here next Sunday. Peace.